Yeah! Guten Morgen. Hello, hello, hello. How are ya? How's your mom? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Are you enjoying your coffee? So the bank numbers came out. We heard from Wells Fargo. We heard from JP Morgan. We heard from PNC. Yeah. Very cool. You know, one thing that stood out to me is BlackRock, the financial firm, now is approaching $10 trillion, 10 times bigger than Wells Fargo. Holy smokes, 10 trillion. Raman's joining the FX Bootcamp in a few days. Thumbs up. Cool. Sammy's like, hey man, I've been following you on YouTube for about a year now and have learned so much. I want to say thank you. Thank you. Well, thank you, Sam. Appreciate that. So, so anyways, we got these bank earnings and all that. So, yeah, cool. So we need to use the market to try to see if the market is in favor of the news or is concerned about the news, all that kind of stuff. What we will find also is, holy smokes, have we hit a lot of targets. So even though this might be good news, it also might be good news to lead to us to take profit and then re-up later next week. Okay? Remember, if you're a bull, you buy a dip. New office lighting. No, all my lights keep dying. And I opened up a box in the storage room that said LED lights. And I opened it up and it was one spotlight from the backyard from 20 years ago. So anyways, no. So I need to order some new lights. I know it's weird, right? It's a spotlight. Anyways. So anywho, it's going to be an interesting day, and I'm going to lean on technical analysis, but you know I always go fundy on you. In the description below the video, there are links. I want you to click on the one to my book on Amazon.com and leave a link, or leave a review. Has anybody done that lately? I don't even know. Be great. You'll also find a link to QuantBox. You'll see some QuantBox today. It's AI sitting on the Google Cloud that's doing macroeconomic analysis for you. There's a link to FX Bootcamp, 88 hours of training videos on Forex trading, technical analysis, fundamental analysis, monetary policy, macroeconomics, swing trading, position trading, day trading, more and more and more. 88 hours for $88, and we also have some live groups. There's a link to tradersway.com, an ethical, trustworthy foreign exchange broker that I recommend. Fast execution speed, narrow spreads, huge swaps, lots of great asset classes to trade, but they earned my loyalty and respect through their business practices, and that's why I recommend them. So tradersway.com. Lots of links, man. Go check them out. Currently, right now, let's look at the market. The biggest winner is NASDAQ, up 2%. S&P500 up 1.4. Japanese stock market, the Nikkei is up 1.2. The Dow is up 1.14. The FTSE is up, boy, I can't even see that. Okay, there we go. 0.6%. The DAX is up 0.4%. And you know what? Last night in the swing trading group, I'm like, let the stock markets be a guide. And the biggest assets are, all the stock markets are the biggest performers. The biggest loser, gold. But also CAD whooping pound, CAD whooping Kiwi. Swissy whooping pound. Okay. Dollar whooping pound. Kiwi, right? So anyways, you can see what I'm trying to get to is Kiwi and pound are weak, and so is Aussie. Well, once again, that we talked about those specific. We talked about Aussie, Kiwi, and pound being weak yesterday in the swing trading group. I think that went almost 4 hours yesterday, so I apologize for that. Taking a look at the market, Bitcoin is up-ish. Okay, it made a higher high, and it's made a higher low, and now we're stalled out. But because of the higher high and the higher low, you would assume a new higher high on this price action. Currently sitting just below 31,000. My WTI has come down over the last few hours, but maybe has stabilized. And so if we use this zone here, and let me get my draw-on tool. If we stay above this zone and then make a higher high above that zone, you would have technical bullishness, aka inverse head and shoulders. Euro dollar, do you remember doing this? The entry was on Tuesday. We planned this trade on Sunday. The entry was Tuesday. And as of today, we just hit the extreme target. Perfect. Okay, perfect. And we'll look at this later on a different chart, but this is just sort of like a warm-up scenario. S&P 500, you can see, is bullish today. There was some hesitation, and now there ain't no hesitation. There ain't no hesitation. That was Rolling Stones Metallica combined with Weird Al. That's pretty good. I just want to change this to daily. And daily is just fine. Daily's just gone. Cool, man. Cool beans. So that worked like a charm. Okay. Anywho, gold has given back some today. You got to go look at a higher time frame, though. And gold says start buying the dip around 25. Okay, like this. Okay, and you would probably mark this one too. Just why not? Okay. And you'll notice that that's basically next week's swing trade. So gold is doing what it's supposed to be doing. Now the dollar's strong. Okay. And this is my point. You might say, well, wait, under these conditions, isn't the dollar supposed to weaken? Why is gold coming down, for example? Well, no, people already made that trade. You know what I mean? People already made that trade. And so now that it's happened, they're taking profit. They're not getting in. They're getting out because it's already happened. So I'll make so one of the things what we want to talk about is why is dollar strong relative to gold and a couple other things, and I'll show you why. Okay, I'll show you why. Let's do that now. I can't get no. I'll show you now. Let's just go right into the dollar pairs. Okay. Why would dollar suddenly possibly get strong today? Well, if I remove this analysis from last week, a week and a half ago, let's get rid of it. I hope you remember it. Okay. Our analysis had suggested that in this zone here, traders will take profit. If traders take profit on their USD CAD trade, they're not really bullish on the dollar, but the dollar gets strong because the shorting of the dollar will be offset. Okay, so market makers will have to go long dollar to exit to clear the market out of the short positions. Doesn't mean the market's long, it just means the bears have left the USD CAD trade for now. And so very often you get up, 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 up. Well, the up, 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 up isn't people buying, it's bears exiting. And then they resume at the roll reversal, is the idea. That's why in a downtrend, you can get an up move for 1 or 2 or 3 days. And then suddenly it's a downtrend again. Well, it's make money, make money, make money, take profit. Make money, make money, make money, make money, take profit. Make money, money. You see? Take profit. So up doesn't mean long. Very often up in a situation like this means out, not up. So anyway, so the target here that we did actually a couple of weeks ago, right before my trip to Europe, here's the extreme target. So if we hit that today, don't be shocked if there's some profit taking on this. Andres, what do you think about advanced GDP and final GDP? That's not what we were concerned about. So to me, just put it in the model and move on. Okay. So one of the things we did in the in the swing trading group is we looked at the IMF's models projecting next year. So that's really what we're looking at, right? Okay. So you did your fundamental analysis. On average, it's been growing at 2.14, but the dollar is weak. Yeah, it should be. If you were at that level, yeah. But remember, what's occurring now is seasonal, and you're looking at things basically. GDP is an annual measurement, even if you break it down monthly and quarterly and all that. It's still an annual thing. We're just doing seasonality. But anyways. So another reason why the dollar might get strong, even though all this news suggests that it shouldn't get strong on the long run. On the short run, look at this. Again, we planned this on Sunday that euro dollar would go up. And in the scenario that we actually played out, so I left plan A and plan B. Plan A didn't work. Plan B did work. So, and again, these lines were drawn on Sunday. So here we are today on Friday. And look I have the line. This is the expected high for the week for euro dollar. Okay. And we just hit it. And notice how we hit this number and we stopped. 1, 2, 3, 4, 5 hours in a row, and on the 6th hour, down. Seems like that number, that line in the sand I drew on Sunday, mattered to more people than just me, huh? Cool. So you might try a continuation pattern, or you might have to wait for a bigger dip on a higher time frame. Meaning you could do this now, but don't be shocked if it kind of does this first. Okay? But what do you guys think? Plan B, enter here, exit here, and we did that over here. Here, actually, Thursday. That, okay? What do you think? What do you think? That's how you do it. You plan it on Thursday. You don't get the entry till Monday night, Tuesday. Entry, projection, boom, 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 boom. Remember, this was actually planned primarily on fundamentals first, not even technicals. The technicals just lined up and you're like, oh, well, that makes sense. So if you want to learn how to do that, there's I think an 8-hour course on that at FX Bootcamp. All right, we'll look at here. No, not weekly. Hang on. Boop, 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 ba. Ba, 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 ba. So the only thing you can do on this is buy dips. Okay. Bumpy says, seems like you're pretty much in sync with the markets. Yep. But really that's the job though, isn't it, Bumpy? One of the things I preach a lot is I don't want you to even try to outsmart the market. I think it's a fallacy. That's not what our job is. So our job is to understand the market and trade with the market. So, yeah. So if I seem to be in sync with the market, good. That I'm trying to do the job. That's what I'm trying to do. So that's why, for example, in the swing trading group last night, we spent a good, 45 minutes understanding the IMF's opinion about global growth over the next 18 months. And we compared Canada and Australia and New Zealand and the United States and the UK and the Eurozone. We compared and contrasted with each other, comparing growth and inflation levels and employment levels, and they are not the same. And it was interesting, there was a couple of currencies that were significantly different from the others. The others were, kind of similar, different degrees, as far as what the IMF expects their economies to do over the next 18 months. But there were a couple that were significantly different. And guess what? That's the basis for our trading, fundamentally speaking. And Do I do that to outsmart the market? No, it explains why capital would or would not flow to those economies. And and remember, that means other traders and investors have made similar decisions, and I want to understand why they're making those decisions so that I could trade along with them. Yeah, the Family Feud metaphor. Yeah, I think I might have stumbled on that one, but anyways. Are you wrong to be bullish on USD Norway? Now, why? So just tell me why, Sammy. Why are you bullish on that? Because I don't know if you're wrong. I don't. You haven't told me why. Oops. Let me get this out of the way. Why? What I learned really last year when the war in Ukraine started to happen, I paid a lot more attention to Norway than I had in a long while. And I looked at USD Norway, but even more specifically Euro Norway. And it was shocking how sort of volatile it was. And so, and how, I wouldn't say, for some reason, it seemed like it wasn't doing what I thought it would do. So maybe I'm wrong, or maybe it's wrong. But I need to understand your rationale, right? Okay. But like, for example, I'm not a bull on US dollar because I believe the economy is going to do well. And very often in newer conversations with newer members of our community, that's where we have a disconnect, where I say, oh, well, the US economy is doing great, sell the dollar. And you're like, wait, what? No, wouldn't the dollar be strong if the economy's good? And that's right off the bat. The misunderstanding there throws everything off. So I don't know. So and again, just take is the quarterly outlook still there? I don't even know if the quarterly outlook is still there. But several weeks ago, I kind of explained how, there's potential dollar weakness because on the short run, things might look good. The metaphor I used last night in the swing trading group was standing on a beach on a beautiful sunny day, a soft breeze blowing in your hair. Yeah, that's where we are now. What you can't see is on the other side of the horizon, 150 miles away, is a nasty hurricane. But enjoy the day. Yeah, Richard Spencer says the meeting minutes points that the U.S. Does not expect recession. Well, you got to be careful because they don't talk that way in meeting minutes. But there wasn't a discussion of a pending crisis, right? But just a slight slowing. But that's one of the things we looked at. So I didn't pull up the Fed meeting minutes, but again, we looked at the details in the IMF, and it said something similar. But, and I would say slight slowing, but definitely a slowing of productivity. And it might not be a recession. It's just kind of like a recession. So, whatever, it does impact things, right? We need to, but more importantly, it's not what the U.S. is doing, really. It's what the countries all around the world are doing. Are we going to have a global slowdown? The United States might actually look pretty good relative to another country. We also looked at emerging markets and stuff like that. We even talked about the Korean won yesterday. So, there's some interesting information out there. So I didn't see an answer on why to be bullish or bearish on USD Norway, but I suppose we could just look at one. I probably have one here. No, we'll do this one. I kind of want to look at Euro Norway. Maybe we'll do both. No. Noki. Cool. So it looks like it's on trend. Let me open up indicators, custom, price action, pivot points. Let's look at 1,000 4-hour candles. You're going to see over here it's going to struggle with the calculations. Got to give it a bit of time. It's a lot of calculations. Richard said, so now do currencies trade based on the healthiness of their economies? That's what it's always done. Okay, there we go. Isn't that pretty? So this is my indicator that shows trend based it's creating pivot points, but not based on high, low, and close, because that's a market. The top of the market, the bottom of the market, and the close of the market. So a typical pivot point is based on previous market conditions. And then from there it tries to say, well, if those conditions continue, then the current market, right, would do this, this, and this. This indicator is not looking at market at all. It's looking at price. And so they're price action pivot points. And it's just indicating the trend. Isn't that pretty? Now that's over 1,000 4-hour candles. Yeah, that's 4,000 hours of analysis. And it's showing you the trend. Isn't that neat? Okay. You might say, well, how do I use that information? You could be a bull. So anyways, oops, let me put that back. And put it here. There we go. So that's kind of interesting. Here's a different look at the same thing. Remember I showed you this earlier, USD CAD. I said, don't be shocked if this starts to go up, but remember, nobody's buying this. Actually, if I were to be more specific, who's buying right now? if this USD CAD starts to go up, as I discussed even just 20 minutes ago, who's buying? Who buys a falling market at support? Bears. Bears are buying. This is how I want you to look at it. Okay? See, a bear would have sold. Okay? Okay? Because that's what bears do. They sell. Okay? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, out. And the way to get out of a short position, like when you're, let's say you had a limit order there. It hits the limit order and your broker executes an offsetting position to cancel out your position. So if you were short and then you take profit, the way you take profit is you go long, taking out your short, and now the position's out. But think of it, it's still buying pressure. So you can get this up move, and it's not people in the market, but it's bears selling to get out of the market. No, sorry. It's bears buying to get out of the market. And then because markets like to trend, very often they resume their positions later because, well, they made money here. They made money on this trade. They made money on this trade. They're going to want to try again and make money on that trade. Okay? But bulls are not buying. Do bulls buy lower lows? Even if it's support? Do bulls buy at support if it's, right, a lower low? No. Bulls buy reversal patterns at support. So you could really simplify your trading and say, well, my name is Wayne McDonald and I am a new currency trader and I am trying to learn how to trade with patience and with discipline and with consistency. So if I'm bullish, I only buy dips in an uptrend. I don't trade bottoms. I don't trade double bottoms. I don't trade triple bottoms. I only trade higher lows in an uptrend. So that's after it's reversed. Okay? You only sell lower highs in a downtrend. You don't sell double tops. You don't sell triple tops. You don't sell head and shoulders patterns. You let all that happen and then you engage. And you're like, and I will do that for the next 3 years until I'm an expert at that. Cool. Right on. Which means under your own rules of engagement, let's say you're a bull on this. Can you buy this? No. Well, what if it does this? Can you buy that? No. Can you buy this now that it's made a higher high? No, because you don't buy higher highs. Okay, so now it drops down to here. Can you buy this? And you go, Yeah, if you wanted to, yeah. And then it makes a new higher high. Can you buy the new higher high? No. But can you buy the new higher low? Yes. And that's it. Like, that's it. That's all you do. And let's say you only end up trading 33% of market conditions. Because 66% of the time, think of it, it's either bottoming out or topping out. And in a move like this, you engage in this type of the market, down, right? Let's do this. Down, 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 up, up, sell. 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 Down, up, 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 out. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, up, down, 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 out. Down, 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 up, sell. Down, 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 down. And you see? So this period you're not trading. This period you're not trading. So 66% of the time, you're spending your time analyzing market conditions and not trading at all. Richard says he was watching an old video of me using Bollinger Bands. Yeah, I just found after a while there was enough information in the price action, you know, that a measure of volatility didn't really, I don't know, it didn't help, it didn't hinder. It's okay. There were some trades that I used to do a lot off of Bollinger Bands, but then I realized I was getting them without the Bollinger Bands too. And, you know, so at some point, like, I removed them. Also, I was studying Bollinger Bands, and I was studying Bollinger Bands based on John Bollinger's, how do you say, opinion, strategy, I guess strategy. I made the mistake, right, of, I guess it's a mistake, of listening to the person who designed them, what they were for. And then I found as people were joining FX Bootcamp, most market participants were using them in completely different ways. I think gurus were just making up stuff. And I remember going to one of the early conferences, and I remember I had this in the back of my mind, like, well, I use John Bollinger's Bollinger Bands the way that John Bollinger designed them. And then I remember he, at a conference, really pointed it out. He's like, that's not what they were meant for. That's not, he's like, I don't do that. And it was the common thing, like riding bands and stuff like that. He's like, no, it's a measure of volatility. He's like, it's not a moving average, right? And so I remember him saying that the common use is not the intended purpose. And I'm like, well, people are using them wrong, basically. And I'm like, And then after a while, I found I was doing the same trades without the need for them, of the measure of volatility. And then, like, look, and I'll also be honest, I was a speaker at another conference. I can't remember which one it was, but Boris Schlossberg was there. I have nothing against him, so I don't mean to poo-poo on another trader. To each his own. But he was doing something like he had like 3 Bollinger Bands, and I'm like, oh my God, whatever, bro. So I guess I just lost interest. But I have nothing against Bollinger Bands, right? Okay. But they're very predictive. I found like they're showing you after the fact what traders have already done based on price action. And that's why volatility comes and goes, because, well, traders accelerate or decelerate their trading. And once you know more about how to trade and where these things are going to happen, well, then they happen. So like again, you don't have to be a rocket surgeon to say, well, this is a place to take profit. Well, guess what? Bollinger Bands are going to tighten there. But I already knew that 3 days ago, 4 days ago, 5 days ago, 8 days ago, 12 days ago. Because, well, that's what, according to pivot points, this is a profit-taking area. So if you have volatility, and then you basically get anti-volatility, money coming out of the market, your B bands are going to tighten. But, dude, I knew that 15 days ago. So why do I need Bollinger Bands now? They're only describing what I already knew. It's not that I'm a genius. It's just like that's how the markets work. That's what you do. Like if you don't know you're supposed to take profit here, you're going to get run over like a loaded freight train. Loaded like a freight train. Okay? Like you should know this stuff. And if you don't, that's probably the source of your lackluster performance, if I may be so bold. You're supposed to know to take profit there. Cool. And suddenly, out of the blue, dollar gets strong. Some people are getting sideswiped. They're like, oh my God, but the bank earnings were good and the stock market's going to rally, and how come the dollar gets strong? Can anybody answer that question? Because it was the first thing I said today. Here's a pop quiz. Why is the dollar suddenly strong, even though the news seems to indicate it should be weak? Richard says, man, you study all the indicators. Well, I started at the beginning, right? So like I studied MACD. Which was invented by Gerald Appel. Yeah, I know that. Gerald Appel invented the moving average crossover, right? The moving average convergence divergence indicator. I know that. Why? I studied it. And you're like, well, why don't you use it anymore? I can see it with my mind. I know what it's doing, and I can look at the chart and essentially do the calculations. So I don't need to take up the real estate on my chart. I know what it is, so I understand. Okay. So Frank answered it. Yeah, Ashish answered it. Yep. We're at places in which the risk on rally is supposed to stop. And you're like, but we got all the good news. Well, those that already knew this a week ago. Now, how did they know it? Well, of course they didn't know it, but they planned on it through their research, and the probabilities were such that, look, CPI was probably going to improve. The bank reports are probably not going to show crisis. So people that are just showing up now, Friday morning, after the fact, are going to get run over. Those that traded this on Monday or Tuesday just got paid. And now they're done. They're done. It's the weekend. It's 8:49 in the morning and they're done. That's what this is showing. Don't look at like this euro dollar, for example, and say everybody's selling. No, smart money's going on vacation. The London boys are like, out, done for the day. Okay. What is it, 2 o'clock in London? Time to go for a Guinness. Let's go, bro. Close your trades. Let's go. They're done. Love London, yeah. I'm like, where do you want to go? Davidoff or JJ Fox? Davidoff's more prestigious, but they don't have a place to sit. But upstairs at JJ Fox, that's pretty nice. We talked about Mayfair, London, last night. One of the things we talked about in the swing trading group is lineage. I showed the Rosalind's. We went through the history in architecture. Okay. So Richard's like, what does downtrending mean on the MACD? Okay. The MACD right now on this 1 hour euro dollar chart is above the waterline. So you have this range, and then you have in the middle, you have a waterline. This MACD is above the waterline, but falling. So at some point, you'd have to go all the way back here. Why not? Why don't I just do it? Why don't I just do it? Just do it, Wayne. I will. Okay, let's do it this way. So here's your MACD. I'll do a better job drawing it now that I'm committed. Loaded like a freight train, lying like it never came, feeling like a space brain, one more time tonight. All right, MACD crossed above the waterline here, and then came down, and then came up, and then, oh, well, that's not quite right. This one, and now it's just starting to turn that way. Okay, I messed up a little here. That's not quite right. Let me do it again. Okay, so it was like this. And it's just starting to head down. Okay. Cool. Okay. And it tells me we have a little bit less bulls than we used to. Okay. But never in a million years would I sell as a bear. It just shows we have less bulls. And that in the future, the bulls are likely to return because this is a trend, and that's what a trend is. So this trend should be set bullishly because we're obviously bullish. Okay, cool. And then look. Let's just go back. This is what I teach at FX Bootcamp. You ready? Buy in the green zone. Exit here. So you're like, but what about MACDs? Who cares? What about the Bollinger Bands? Who cares? Right? Like, why isn't this good enough? Buy the green zone, exit this zone. It's the only thing on this chart. You see this? Buy in there. But Wayne, where do I take profit? This is the conservative profit target. This is the aggressive profit target. We knew that last week. I want you to think about that. I'm not making this crap up now on a Friday. We knew this Thursday of last week. We discussed it Thursday of last week. And on that other chart, if you recall, I drew two plans. Plan A, Plan B. You remember that on the other chart? What if it overshoots the green zone? Well, you're either wrong or you have the wrong price or you have the wrong time, Bumpy. But you got 52 of these shots on dozens of currency pairs. So you might just be looking at the wrong pair. Go find another pair. Okay? You have 25 things you can look at over 52 weeks. Why don't you just trade the ones that don't overshoot? Okay? Or let's say it gets a little ugly and you don't like it. So let's say it did this, and then 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 this. Well, there's clearly bears. But then if it very quickly pops back up and turns bullish, you can re-engage the strategy. And usually an overshoot like that, Bumpy, has to do with, you might be looking at day trading, but this is a swing trading setup. Or you're looking at swing trading and it's a position trading setup, meaning it's mediocre on a weekly pivot, but it's really setting up on a monthly pivot. You see what I mean? Oh, you're saying this? You won't. Oh yeah, forget it. I mean, again, forget it. You're looking at your indicators to make decisions. At that point, you're like, oh, it dropped through there. No, dude, no, that's not how you trade. That's not how you trade. Okay, think about it. A bare minimum of 3 weeks ago. I think specifically March 22nd. Okay. I became a bull in this pair. So I either buy here or I buy here, and then I put a stop below support. I don't care about this. That takes you out? Dude, no. I have fundamental macroeconomic rationale for going long. I'm going long. Okay? That I don't give a crap about. Because it's buy that price or buy that price. One of the things we talked about in the swing trading group is this. Okay, literally, not yesterday's swing trading group, but this swing trading group. I created, this is plan A, and this is plan B. And I said, your decision now is, your stop is probably down here, and you could have a 150 pips stop, or you could have 350 pip stops, which tries to incorporate catching these. So like maybe you buy this and have a 50 pip stop and you lose. So then you put here another one, 50 pips. And if you lose, maybe you end up buying another one down here, which is an inside week, and that's very dangerous. And I generally don't do that, but you could. So you said, instead of having just one giant 150 pip stop, you can break it down into smaller pieces and say, well, you will try 3 times to go long. 0 times short, by the way. And I'm like, you're spreading your risk. Either way, it ends up being the same if you feel uncomfortable with a 150 pip stop. But you have to understand from a swing trading point of view, you start buying at this price and you stop buying at that price. And the rest is just price action. And your stops are always going to go right about there. Why? It has to be below support. Take the training course. Stop denying yourself of your destiny. I think there's probably tons of people who are like, I like what he says, I like his trading style, but I don't want to sign up to FX Bootcamp because he's going to get rich on the $88 he's charging for 88 hours of training videos. And you're like, I just can't give him $88. Well, you're denying yourself your own destiny. I won't make it any cheaper than that because it's so stupidly cheap. It's so dumb at $88. It's so cheap. It's silly. I should charge $888 and it would still be cheap. I'm not even joking. So like, turn that psychology off and say, well, dude, this guy's been trading for 20 years. And for $88, you can learn everything I've learned in 20 years. And just do it. Okay? It might be, right, Peter? I don't know. Well, if you were going to hire me to provide advice, it's definitely going to be more than 8,888. And what am I doing? I'm applying everything in the training courses, which is the sum of my experience of trading for 20 years, and apply it. Yeah, compared to college tuition, that's not even a semester. Right? I paid more than that every 3.5 months. How long is a semester? 16 weeks? Yeah, can you really put a price? Oh, but well, we all have different psychology, so humans are funny. Some people would only buy it for 888 or 8,888, but they wouldn't buy it at 88 because it sounds cheap, like it's worthless. So anyways, whatever, bro. That's how you swing trade, done. And once again, like, think about it. If you understand the markets, which is different from economics. See, QuantBox analyzes economics, which is great. Macroeconomics. Macroeconomics is complicated and you have to have so much data. It's crazy. So I just have a machine do it for me. Because I'm lazy, but the computer is stupid. So it just does basic calculations for me. See, QuantBox isn't really smart. It's just doing labor for me. Go get this information. What's CPI in the UK this quarter? What was CPI in the UK last quarter? And can you compare that to the Eurozone or to New Zealand? What was CPI this quarter in New Zealand? What was CPI last quarter? What's the relative change? Can you display that for me? Is inflation increasing in these two economies or decreasing? And comparatively, which one is better for investment? But it's not thinking, it's just doing labor. Great. Well, I don't have a lot of time, so I'd love having machines automate all those complicated calculations for me. Great. But is it enough to become a filthy, stinking rich billionaire where you can laugh at poor people? No. You still have a job to do. You have to understand the market now. That's economics. So now what? I look at that, and yesterday and the day before, I said, you know what? I think that we're not going to learn that much information out of these bank reports coming out during earnings season. It's important, and the market's clearly waiting for it, but I don't think we're going to learn that much. Sweet. But I also expect profit taking today, this morning. While I'm eating breakfast, profit taking's coming. Okay? Okay? So you see? So I look at it, well, I think fundamentally this will go up. But today it's going to be down. And amateur traders are logging in and they're like, buy, and they lose money. And buy, and they lose money. Buy, and they lose money. Buy, and they make some money. And then I buy in here. Buy. Buy, right? And so you have to understand before it happens, that's an out, and this is an in. Okay? In fact, to be even more precise, I'll get out of that. The in is here. So in, out. If you don't understand that, then what happens is you probably don't expect this to happen. You expected that to happen. You didn't expect the up. Because you're trading this. Great, good for you. But you didn't expect this. Okay? And so you can see you made hardly any money down here, and then the money you made here, you lost here. Now you're back to basically break even. Okay? But now you should be riding the 21 and everything's golden, right? But you didn't know this? Ha! I have it drawn on my chart a week in advance. Conservative, aggressive. I just have to match it with my confidence in the trend. So if I lacked the confidence as a bull, I would have gotten out here for profit, and now we're back at this price. I didn't lose anything. The only difference is by Wednesday afternoon, I'm done for the week. So I go to my, Cambridge Community College class on underwater basket weaving. And I live a life where I don't work Thursdays or Fridays. Or in fact, you could have made the swing trade. You entered here or here or here, and you were done. And then you put your limit, put your limit at the aggressive target. Or put half your limit here and half the limit there, or whatever. That's the easiest part. But the thing is, if you can't anticipate this, which is not just technical, it's fundamental, and you can't anticipate this, you simply don't understand the markets. Bumpy, I do that informally a lot, actually. Okay. So here's the thing. Most amateur traders, though, don't have a solid idea of this or this. They're pretty okay in the middle because they're learning the tools, and they can ride a moving average. They can use an oscillator, that kind of stuff. But they can't anticipate changes in direction, nor is there a strategy on sentiment or bias. And then behind that, there's no understanding or very little understanding of macroeconomics, what we call fundamentals. So with sort of a weak understanding of technicals, no bias, and a very weak understanding of fundamental analysis of economic data, there's no understanding of when and why. They're okay at understanding of what's happening right now, but they don't know when and they don't know why the market moves. So again, to put this in perspective, an amateur knows that it just made a lower low, lower high, lower low. They're pretty good at this, but they don't see the change and they don't understand why. And then they do this and they're pretty good at getting back. And they didn't see this and they don't understand why. And they don't know that it's probably going to reverse back up here, whether it's today, Monday, or Tuesday, or whatever. And inevitably, for those that get frustrated with this, they were making money to the left, and then they lose some money here because they're still long. And then it comes through here, and then they get short, and they make some money for a while. And then they lose on this position because they're still short. And then they start making money being long. And then now they're losing money. And then they get short and they make some money. And then over here they lose money because it turns long again, but they're still short. And you get sort of like the middle chunks. So if you find yourself in that situation where, let's say you made 100 pips yesterday, but now you lose 100 pips today, but tomorrow you make 100 pips, and then the next day you lose 100 pips, it's because you're the monkey in the middle. Okay? You're the monkey in the middle. And what I propose when you look at trading history statistically, I say, well, what if we focus on moving you out of the monkey in the middle situation? So if you understand what I'm trying to say here, then let's take this another level and say, what if you are a bull? I forced you to be a bull, or you made a bullish bias, or you even just flipped a coin and you said, for the next 3 months, I only buy dips. The point of that is to move you out of the middle and have you only buy from a bullish point of view. So like you're a buyer here upon a changing of the guard of moving averages. Or maybe you're a buyer here, let's say on the 2155, right? Let's make that even more specific. You can only buy, and in this case on a 1 hour, you can only buy 2155 crosses up. So you're not in here, but you are there and you're not here, okay? And now you might say, do I stay in as long as the 2155 cross is up? Well, you could, but it's too basic of a strategy and it usually leads to underperformance. So you can have that lagging strategy for entry because you're just using it like you don't want to buy this market until it's technically bullish. Great, that's moving averages are good for that. But then you use a leading indicator that says you should get out in this price. And because you're only a bull, can only be a bull because of your bias or you flipped a coin or whatever, you're only looking now for future buys down here, but you're not the monkey in the middle. So we're trying to get rid of the monkey in the middle kind of stuff so that if you're going to be a buyer, you buy closer to the bottom and you avoid the middle at all cost. And then you spend more time trying to take profit at tops, at prices that have probability of being toppish. So now what you're doing is you're trying to spread a little bit. You want to enter a little closer to the bottom and exit closer to the top. and you're trying to avoid the middle because that's where the amateurs live. Okay? Because if you're trying to be on both sides, see, a bull is always a bull. A bear is always a bear. So if you're switching back and forth, you're not a bull and you're not a bear. Does anybody know what you are? If you're not a bull and you're not a bear, you're in the middle all the time because you're kind of a bull, but you're late. But then you're kind of a bear, but you're late. And then you're kind of a bull, but you're late. You're always late getting in and out. So you're bullish and then you're bearish, then you're bullish and they're bearish. So if you're not a bull or a bear, what are you? A pig. And what happens to pigs? Huh? Yeah. Huh? Pigs get slaughtered. Pigs get slaughtered. So that's why you keep it there. Yeah, well, you have to remind yourself every morning. I mentored somebody one time that had recently blown up their trading account and they wanted to recover psychologically. And every day I had them say something like, "My name is Wayne McDonald. I'm a Forex trader. And today I will not blow up my trading account. Today I will not lose a lot of money. I am patient and I am disciplined and I will trade my plan." So on and so forth, right? And they have a verbal mantra they say out loud. So it's sort of like walking into your office every day and you see this pig. Now, not only is it a pig, the reason I bought it is notice it's actually a pig that's been slaughtered. It's got blood coming out of the nose. Here, let's take a closer look. It's got blood coming out of the nose. How do we do this? Okay, there's blood coming out of the eyes. You see the eyes been all ripped up. The neck has been cut. The spinal cord's been cut. Okay? There's blood coming out of its mouth. Okay? You see, its neck's been sliced off. It's like, look at the spinal cord, for crying out loud, huh? It's a pig that's been slaughtered. And I see this every morning. Okay, you see? Yeah. So, it's important, right? So, anywho, yeah, nice. So that's that. So everything's doing what it's supposed to do. Like literally, I haven't gone through a ton of charts yet, but I can tell you lots of things have hit targets, bro. Okay. Oil has stopped at the weekly projected high. R2 is $83. Oil stopped at $83. Why? It's supposed to stop at $83. Isn't that enough? Okay. What about, you're like, but that's WTI. This is a different asset with different prices, with different buyers and different sellers. And it did the exact same thing as WTI. It hit the projected top twice, maybe even a third time. Okay. At, what is that? $87.60 and stopped. Oh, you didn't know that? Maybe you're supposed to. And are bears selling? No, I don't think so. Pop quiz, can you draw the MACD? Yeah, it's thinking about dropping below the waterline on the histogram. You're like, what? Wait, what? Okay, let's do this. Again, it's near the waterline, the histogram, and thinking about dropping below. So it's falling back toward the histogram and about to cross below. Let me change the template. FX Bootcamp Standard. Loaded like a freight train. There's the histogram, aka the waterline. Lying like it never came, feeling like a space brand, one more time tonight. And you're like, look at the divergence, bruh. Okay. What does the divergence mean? Less and less and less and less bulls. Doesn't mean bears. It means bulls are starting to take profit between this $82 and $83. Why would a bull start to take profit somewhere around $82 and $83? I want you to think about that because we don't have the answer here. So how did Wayne get to his chart setup? Well, I spent a lot of time understanding this chart and understanding these oscillators like this. So once you understand your oscillators, so this is MACD, invented by Gerald Appel. You can Google it. You know I'm right. And I started to observe this kind of stuff. And I'm like, okay, this tells me, based on the understanding of mathematics, we have less bulls. But then I spent a lot of time on this. I'm like, why are the bulls taking profit at between 82 and 83? Why don't I know that in advance? Because they know it in advance. So I get it now. Some people started taking profit here, and others started taking profit here. And what do they know that I don't know? Imagine me asking this 15 years ago. Huh? What do they know? That's a valid question, right? See, I ask myself, why? So you go, insert, indicators, custom. Let me add my own indicator here. And I will go to biased pivots. Where are my biased pivots? And I want to, is it weekly or monthly? We'll see. Okay. And now let me zoom in here on the 1 hour chart. Okay. And look at that. Okay. out. And up here, okay, where we are now, under current market conditions, was a little bit closer to here. But remember, we have to look at last week or look at last month. But you can see one reason this rolled over hard here is because it's supposed to. Not because MACD said, because MACD is lagging. It didn't know. Look at that. It's describing after the fact because it's a lagging indicator. But you already know this days ago that should get out. And that started to explain to me because I could see that this divergence is there's less and less bulls, but I didn't know why. But now I know why, and this only confirms it's true. And I'm like, oh, God, that's killer, bro. Okay. So anyways, as we approach that logical target, let me put it back a little. Well, I guess we can leave it there. As we approach that logical target, it just makes sense. Okay. Yeah, look, pound is quite weak. So what's going on with Aussie? Well, let's take a look at this. The weekly swing trade is buy somewhere in this zone. That's the buy zone for the week. And then exit. That's the conservative target for the week. And here's the interesting thing. If you bought down in here around this price, maybe it's the first touch on the left, maybe it's the second touch on the right, but if you bought there, then your target is here. That's in the training course, by the way. Did you know that? So let's say you did the conservative one, you bought on Tuesday or Wednesday, then you're supposed to have a limit order right here. Oh, God. And so maybe that's why suddenly Aussie dollar's coming down. Okay. Cool. So how about something like this? Okay. Whatever. Okay. I want to switch this to, well, I guess we can look at this. This is an interesting scalping setup, isn't it? Okay. Okay. Price action. This is a consolidation breakout. You project this pivot. It's not a pivot point, it's a pivot. Okay. And as you get near this area, you expect to sell. It's just price action. This is a breakout strategy, right? Here's a pivot, here's a pivot, here's a pivot. We call that a top. Okay. Anyways, breakout, pull back somewhere in that zone. So let's say somewhere in here, you're probably going to get short. Now you don't know if it's going to continue, right? So this price is terribly important, in particular at a market open, and that's what's happening here. Cool. I want to change this. Let's go to this. Cool. Cool. All right. So this is going up. Cool. Nice. Well, I already have everything lined up for you, so the work's already been done. Favor, I use two things that are leading indicators. One is price action, and one is pivot points. So when I say on a Thursday, this is next week's probable high, well, I'm talking 3, 4, 5 days in advance. It's a leading indicator. And if price is, let's do it this way. If price is up here and I say I'm a bull and therefore I want to buy a dip somewhere around the previous support, then I've just predicted the future. Like, I don't buy here, but I'll buy a roll reversal somewhere in the future, somewhere around this price. Okay, somewhere around this price, I'll drag it around. And somewhere around 175, I'm going to buy the dip. Well, that's leading. That's price action. Think about it. If you are a bull, you only buy dips at support. We just talked about this earlier, didn't we? Okay. Ooh, 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 ooh. Loaded like a freight train. I'm on a night train. Oops. I'm on a night train. Ready to crash and burn. Yeah, I got to listen to some old Guns N' Roses today, huh? Hey, we all have our agenda. So anyways, how would you know to buy these dips? Does anybody know? How would you know to be long Euro Kiwi? What a random esoteric kind of pair to pay attention to. How would I know to be a buyer, to buy the dips? And then from that knowledge, set these charts up any way you want so that all you do is analyze what's a dip. Okay? Look at this. It even's labeled continuation. That's a dip. Okay? You see this? It's even labeled. That's a dip. But how do you know? If you don't know to be a bull, how do you know? Does anybody know how to know? Quantbox would be a good start. Thank you, Lucas. Let's see. It has a score of 5. Institutional investors favor euro over Kiwi. Retail investors favor euro over Kiwi. Seasonality says this pair usually goes up this time of year. The technical trend is ridiculously bullish. GDP favors euro over Kiwi. Inflation favors euro over Kiwi. But New Zealand's doing better with unemployment and interest rates. So a score, +5, go long, brah. Now, you see the retail sentiment? Here's the lovely thing, and I'm going to leave you with this thought. QuantBox says, oh, look at what retail is doing. What retail is doing means you should buy. That's why it gets a +1, not a -1. And then you look at retail, and 64% of retail traders are short this. They're selling the rallies. That's the old you. You don't sell higher highs. It should be impossible. But retail traders are shorting this despite it going up. But if you did quantitative analysis, comparative quantitative analysis between these two economies, based on things like GDP growth and the change in GDP growth, inflation and the change in inflation, unemployment and the change in unemployment, interest rates and the change, and the interest rate differential, and professional positioning, not opinion, but money in the market, retail money in the market, and 20-year and 5-year averages for what this typically does this time of year. Look at this, guys. Just look at this one part, and then I'll leave you to it. Let me draw this. In the period of this March, April, May period, this pair tends to go up, but only looking at 20 years worth of data. Only 20. And over the last 5 years, generally, no. And this is what it's doing right now. Oh, that's interesting. And here's the projection. In 7 days, we should be way up there around 178. 178? We're only at 176. So maybe that's how you know to buy the dip. Oh, look, I already have it marked out on my charts. What does that tell you? Right? That's how the wane do. I want to do this in a different color. Let's do it that one. That's how the wane do. And then what? We're going to get up somewhere around here. And then the market's going to collapse and no one's going to see it coming. Now you said Euro Aussie, but whatever. I picked Euro Kiwi. Do you know why? Because we've known this now for weeks. Okay? We've known this for weeks. That's something that I'm interested in. I've shown it multiple times. Okay? And I'm not as bullish on Euro Aussie. I'm just not, I know what you said, but I'm not as interested in what you are doing. Sorry, I don't mean that insulting. I mean, you have to choose on a pair, right? So now we can look at this, insert Euro Aussie. Aussie. Where is this stupid thing? I'm looking for Aussie on the right. Euro. Maybe I just need to look on Euro on the left. Euro ZAR, Euro Tri, Euro CAD, Euro Kiwi. What the heck is this stupid Euro Aussie? There it is, way up there. All right. Let's take a look. Cool. It's not going up, it's going down. Sweet. I don't care. Why? Not interested. It's not likely to perform as well. So that makes sense to me. But now if you're a technical trader, look, it's easy. Okay, that's your sell zone. And here's your breach zone. Let's do this. Here's your breach zone. Okay, so if you are a bear, boop. Okay, you got this, makes the lower low. You don't sell that. But you do have, right, this area here. I mean, look, it's really, it's simple price action. Look at, even a dumb indicator can draw it all for you, right? Cool. So that's where you're projected to sell. And now the idea is your next sell is if it makes a lower low, then you're going to sell the next lower high. And then you're going to draw a box over here. And then if it makes a lower low, then you're going to sell a lower high. And if it makes a lower low, then you're going to sell a lower high. And the way I teach you price action is it's leading. Because when you make a lower low, so I want you to look, I'll do one here. I want you to look at that area. Once you've made a lower low and you're down there, you go back up to the left, drag this across the right, and somewhere around there in the future, if price goes to somewhere in that region, you're going to look to sell. Ideally on a much smaller time frame than a 4-hour. And then if you're down here, you've made a lower low, then go back to the left, drag this across, then somewhere around there, you're going to look to sell. And if it falls and it makes a lower low down here, then you're going to look left and you're going to drag this. And in the future, somewhere around there, it might go this high. It might go that high. But the difference between, let's say, a more professional trader and a more retail trader is the more professional trader is already thinking tomorrow, because on a 4-hour chart, this is tomorrow or the next day. They're thinking well in advance what they're going to do. And an amateur trader is reacting. Okay? And they're probably stuck on a 15-minute chart or something like that, and they miss something obvious, like maybe this one, you're out. And an amateur trader won't know that, right? So what will they do? They'll try it again. Sell. Right? Which means they lose money here, which takes money away from this profitable trade. And now they only have this profitable trade there, but that offset the loss on the long here, and so on and so forth. And that's where you get monkey in the middle stuff. Okay. And the difference between break-even trading and profitable trading is very slight. Okay, let me say that again. The difference between break-even trading and profitable trading is very slight. It's not like you have to be a better trader. You just have to trade slightly differently. I don't mean in technique, but in like maybe something like investing into a quant box and using it as a tool will help you to say, well, this one's going to be choppier and this one is going to be just slightly better for various reasons. It's got cleaner macroeconomics. It's not perfect, but it's cleaner. And you stay away from buying this. And look, the price action now seems bearish. And on the other one, you're doing just fine. Okay. Okay. Bumpy says, wouldn't you be more bullish on Euro Aussie? ECB looking to hike more. Well, that makes me want to buy Euro. Okay. And RBA pausing. Did you look at the IMF projections and compare the outlook for Australia versus New Zealand? I did. 30 or 40 people in the swing trading group did. And that answers your question. And with that, guys, have a wonderful weekend. Sorry for an almost 2-hour live stream today. I'm just fired up. I have passion for what we do. I have so much going on in my mind. I can't even remember if I ate breakfast. I had to ask my wife. I'm like, did I eat breakfast this morning? She's like, yeah, you did eat. Cool. I almost ate breakfast twice because I just got so much on my mind. And what's on my mind is you and us. So thank you for being in my life. Thank you for being a positive influence. Peace on earth. May the pips be with you. May our profits be above average. And please click the thumbs up button on the way out. It would be great just once if a few hundred people watch the video. Wouldn't it be great if there was at least 100 thumbs up? It's weird to see, let's say 1,000 people watch it and 12 people thumbs up. Dude, seriously? But whatever. It'd be cool if it happened once. But peace on earth. May the pips be with you. May our profits be above average. That just happened.